it's very important to understand what environment you're in, because it's going to influence how you trade. So the old saw is easy times follow difficult times, and difficult times follow easy periods. So I've got the chart of silver here. I'm going to show you what happened. So we had a very difficult time from April of 23 all the way until basically about March, I think, was when gold broke out, of 2024. And what this does is it cements in traders' mindset that you have to move quickly. You have to take profits quickly. You have to try to buy at bottoms, sell at tops. And when you're in this kind of a choppy environment, it's, despite what some people will claim, you're probably going to lose money. It's very difficult to pick these bottoms and then pick these tops and get in and out over and over. It's also, ignore these people that tell you need to sell short. I can guarantee that 99% of you are going to lose more money than you make trying to short. Shorting is difficult. It is extremely difficult when you're in a long-term bull market, and it's even damn difficult when you're in a secular bear market, because you get these violent rallies that knock you out. So more often than not, you can't sell short on a breakdown, because the breakdown doesn't follow through, and you get a violent rally and you get knocked out of your short. So my advice is to ignore these people that tell you need to short. Most of you are going to lose money at it. But here's what happens. So you get this long period of back and forth choppiness that's damn near impossible to trade, and all you do is you end up losing money. And so that cements in your brain that you have to take profits quickly. And so you're not prepared when the environment changes and we go from a difficult period to an easy period. So generally what happens is you get a rally, and then you take profits very quickly, and then the rally keeps going. You were not anticipating a trending move, so you've sold and you got out of you got on the sidelines, and then you start to get left behind, and then FOMO starts to hit, and you buy near the top, and then you get caught in a minor correction, which in real time doesn't look minor, and you sell. You panic sell at the bottom, because the memory of this is still there, and so you buy at the top because you've got FOMO, and then you sell at the bottom because you're afraid that the market is topped and is going down, and then of course you get the move isn't over yet, and you get a strong move, and then what happens is when you get towards the top of this intermediate cycle, the mentality at this point has been firmly set in your mind that price is going higher and that you need to buy every dip. So the complete opposite of what was going on in your brain back here. And you can see, let me zoom in a little bit, and you can see this play out. You need to buy every dip because price is going to the moon. You don't want to get left behind. So you get this big rally, and you think, here we go. But then the rally fades away. And so now you're a little bit worried, but then another big rally. And so you think, it's safe. And then the rally fades away. And then again. And then you'll get a daily cycle low, and you'll get a rally that lasts a little longer, and now you're convinced that we're starting the next leg up, but we aren't. The correction hasn't lasted long enough or gone deep enough to erase that to the moon mentality, that FOMO mentality that was instilled in traders at this top. And so what happens is now we start going back down, and now things really start to get serious. And at this point, we have completely erased the to the moon mentality right here. Sentiment is bearish, and now we are set up for the next intermediate rally. And then along the way, you'll get a significant dip that kind of clears that sentiment. As you start to get this strong trending move here, a little too many people get bullish, and then you get a dip that kind of wipes that out. And then you have another strong trending move, and you need another dip again to kind of clear that short-term bullish sentiment. And now we're in the end game, the ballistic phase of this intermediate rally. And this ballistic phase, this is where every retail trader is going to start piling in, and sentiment will become wildly bullish. If you think that to the moon sentiment was pervasive over here, it's going to be much stronger here when we get our top. And understand that this kind of a move, the ballistic move, is an ending phase move, not a beginning phase move. And so you have to be prepared to switch your mindset 180 degrees. So when we get the top, first thing you got to understand is this is an ending phase move. It's not over yet, and it has probably has 2 or 3 weeks to run. But as we start to near that top, we're going to get these huge 6, 7, 8% days, and it's going to make people believe that price can never go down. And then we'll get a top, and then this same kind of pattern will happen. People will be very locked in on the to the moon mentality, and they'll try to buy every dip, and it'll be too soon. As I've said before, one of two things have to happen when you get a top. You either have to go sideways for a long period of time to wipe out that FOMO mentality, or you need to have a sharp correction. A sideways move takes months. 4 months is probably minimum. A corrective move, depending on how sharp it is, can be over within 4 weeks, but they usually take at least 8 weeks to run its course. So when this ballistic move finishes, if you're trying to get back in the market and at least 8 weeks hasn't gone by, then you're too early. If we get a convincing rally for 3 or 4 or 5 days out of a daily cycle low, and you think, and it's only maybe been 3 weeks or 2.5 weeks since the top, but you think, oh, this is, I got to get back in because this is the buying opportunity, and we're going to the moon again. Yeah, you're too early. So you have to be able to switch your mental outlook 180 degrees, and you have to be able to be patient. And this, I've talked about this before. This is when the cancellation index starts to spike, is when we get into these corrective phases. It's because these people they're coming off of a FOMO top, and they want this to repeat quickly. Maybe they waited all the way to the top to buy, and they want this to repeat quickly, but when the market doesn't give it to them as quick as they want, they get frustrated, and they quit, and then at the bottom it's the exact opposite. You got black pessimism, and nobody wants to buy, and I have a tough time trying to convince people that now it's time to buy. So right now it's time to ride the ballistic phase. There's going to be a lot of money made in the next several weeks, but when it's time to sell, you need to sell, and you need to understand that it's going to require probably minimum, unless it's a really sharp correction, it's probably going to require 6 to 8 weeks before it's time to buy again. And so, if you're one of these people that gets frustrated easily, then you're going to be one of those people that adds to the cancellation index. That when it starts to hit a crescendo is the bell ringing for the rest of us that now it's time to buy, and the cancellation index was spiking pretty hard down here at this bottom, and it was the bell ringing that a new intermediate cycle advance was beginning. And I've been warning people that we got to have the ballistic phase before this is over, and that started on Friday. It's not over yet, and there will be down days along the way, but there are specific signs that we look for to tell us that the top is in or the top is very close, and that it's time to reverse your mindset 180 degrees and go into protection mode, so that you don't give back all of your gains by trying to buy too soon, especially trying to leverage too soon during the declining phase of the intermediate cycle. So I've still got the SMT is still open for new subscribers. I'll leave it open while we ride this ballistic phase. But probably most importantly is when we get to that top, you need to listen to me and be able to turn your mental outlook 180 degrees when we transition from the ending phase of the advance of an intermediate cycle into the declining phase of the intermediate cycle, because the markets just are completely different environments, and you need to trade them completely different. And that doesn't mean you need to short them. It just means you need to mostly be on the sidelines or look somewhere else for your trading opportunities.